Welcome back to Investing Talk podcast. Today we are looking at a company that is it's really the ultimate Rorschach test for investors. You ask one person, they'll say it's the reckless poster child of the meme stock era, just a casino for retail traders. And then you ask someone else, and it's this misunderstood financial powerhouse that's, quietly building the future of banking. But here's the thing that really caught my eye and frankly made me a little skeptical. This company is trading at over 50 times its earnings. That is a massive, massive premium. So the question is this just another bubble waiting to burst, or has this business actually matured?
It's a fair question. But, if you really look at the numbers, that whole casino narrative, it's kind of irrelevant now. I mean, this isn't just about trading dog-themed coins anymore. We're looking at a company that just doubled its revenue year over year. Doubled. They hit $1.3 billion in a single quarter. That isn't hype. I mean, that's just execution. They're building what is basically a financial super app for the next generation. It covers everything from crypto to banking to AI. They're not just trying to get you to trade. They want to manage your entire financial life.
Okay, that is a bold claim. Doubling revenue is impressive, I'll give you that, but we need to see if the foundation is actually solid.
Exactly. And that's what makes this so interesting. Today, we're looking at Robinhood markets.
As usual, before we start, subscribe, like, and comment to this video to support the show. It really, really helps us keep these coming. So let's get into the fundamentals. You said $1.3 billion for Q3 2025. That's a huge jump. Break that down for me. Where is it all coming from?
Well, crypto is definitely a big part of it. You can't ignore that. Crypto revenue specifically just exploded by about 300%.
300%? Wow.
But look at the whole picture. Transaction-based revenue overall was up 129%. And the crucial thing here is that they aren't just burning cash to get those numbers.
Yeah.
That used to be the knock on them, right?
Yeah, that was always my issue. It felt like they were just buying growth at any cost, but you're saying they're actually profitable now.
Oh, very profitable. Their net income has flipped decisively positive. We're seeing record profitability, somewhere in the range of $386 million to over $550 million. And the margins are what really tell the story. Their adjusted EBITDA margins are sitting at a massive 56%.
56%? Wait, say that again?
56%.
That's incredibly high. That sounds like a software company.
Exactly. That's not the profile of some cash-burning startup. This is what we call a profitable compounder. They figured out how to scale their revenue without costs exploding alongside it. No physical branches, no thousands of loan officers.
So every extra dollar just drops straight to the bottom line. That's real operating leverage.
That's it in action.
Okay, I have to admit, 56% margins. That's nothing to sneeze at. But let's talk about the user base. My worry with these apps is always that the users are fickle, They download it, get their free stock, and then they're gone. Is there a real moat here?
It's definitely more than just a slick interface now. They've got about 26.9 million funded customers. That's up 10% year over year. But the real moat is how deep they're getting into those customers' financial lives. It's not just buy the stock anymore. They have diversified into like 9 to 11 different business lines that are each generating over $100 million annually.
Wait, 11 business lines? I thought it was just trading and maybe some interest.
That's the whole super app pivot. Think about Robinhood Gold. They have 3.9 million subscribers paying for that.
And that's sticky, recurring revenue.
Exactly. It smooths out the trading volatility. Then you have Robinhood Cortex, their new AI investment assistant. And they're making a huge push into banking, offering 4% APY on savings. They are locking people in.
Right, because once your savings are there and your crypto and your AI, you're not going to switch to some legacy broker for a slightly better PDF report.
You're not. They are trying to be the bank for Gen Z. And they have the war chest to do it. They're sitting on about $4.3 billion in cash.
$4.3 billion.
And they're capital light. They don't have those heavy infrastructure costs. They even initiated a $1 billion share buyback program.
A buyback. That's something you see from a mature blue chip, not a high-growth fintech.
It signals confidence. It's a message to the market that they've graduated from the startup phase.
All right, so the fundamentals look surprisingly robust. But let's pivot to the charts and see if the price matches the story.
It absolutely does, but it has been a wild ride.
Looking at the data, the stock was up about 230% in 2025 alone. I mean, that is a massive run. And over the last 12 months, it's nearly 470%. And that kind of move makes me nervous. It feels a bit parabolic.
It is a huge move, no doubt. But the structure of that move was pretty clear. It was a pattern of higher highs and higher lows. It peaked around $153. But recently, we've seen some volatility.
Right, and that's what I wanted to ask about. It dipped down towards that $100 level. In technical terms, that pushed it into oversold territory, didn't it?
It did. And when a stock with that kind of momentum gets oversold, traders start seeing a buy-the-dip opportunity.
The selling pressure gets exhausted.
Exactly. And despite that dip, the broader trend is still really strong. The stock is in a golden cross formation.
Can you just explain that for listeners who aren't chart nerds?
Sure. A golden cross is just when the short-term moving average, like the 50-day, crosses above the long-term one, like the 200-day. It's a classic bullish signal.
So it's a green light for institutional buying. What about volume on this dip? Panic selling or...
It's interesting. We did see volume spikes, mostly tied to crypto sliding and some general risk-off sentiment. But the data suggests this looks more like an accumulation phase than a mass exit. The institutional ownership is incredibly high, around 93%.
93%. So the entire float is basically locked up by big funds.
It means the smart money is holding. They're not folding just because Bitcoin had a bad week. They're looking at analyst price targets between $155 and $180 and seeing a lot of upside.
So technically, we've got a strong uptrend that pulled back to a key level with massive institutional backing. That is a compelling setup. Let's pivot to sentiment. Let's see what the market and the street are actually saying.
The sentiment data is. It's just overwhelmingly bullish. You've even got Jim Cramer explicitly calling it a buy in late January.
Kramer, huh? Well, what about the actual analysts?
Piper Sandler recommended buying the dip. Mizuho is maintaining buy ratings, targets up at $172. The quant scores are very high. And you've got firms like Pinnacle Wealth and Goldstein Advisors opening new positions. Even Cathie Wood's ARK is buying up crypto peers, which signals sector strength.
Okay, but I have to point this out. I saw the chief legal officer, Daniel Gallagher, sold about $3.6 million worth of stock. Shouldn't we be worried when insiders are selling?
Context is key there. That was a pre-planned sale, a 10b5-1 plan, and it happened near the 52-week highs.
So it's an automated schedule. He didn't just wake up and decide to sell.
Exactly. It was on the calendar for months. It's pretty standard for an executive to diversify after a 400% run-up.
Fair enough. Now let's talk about the rumor mill. Because with a stock like this, narrative is huge. What are the big what-ifs floating around?
Oh, this is where it gets really interesting. The biggest one has to be the Trump accounts rumor.
The what?
Trump accounts. Rumors that Robinhood is looking to administer government-backed child savings accounts. Reportedly, the CEO pitched this directly to the president.
Wow. I mean, if they landed a government contract to manage savings accounts for millions of kids, that's the ultimate legitimization, isn't it?
It changes everything. You go from being a broker for day traders to being a partner of the federal government, a permanent fixture.
That's huge.
Then you have the rumor about the SpaceX IPO. Talk is that Robinhood could offer retail access.
That would be insane. SpaceX is the most anticipated IPO of the decade. The user growth from that alone.
And on the crypto side, the Bitstamp acquisition is closing soon, which expands their global footprint. So you have these massive catalysts potentially lining up.
Okay, hold on. We need to look at the risks before we get too excited. Let's look at the bear case. For all this talk of diversification, aren't they still just a proxy for Bitcoin?
That is the #1 risk for sure.
Right. Crypto revenue up 300%, great when Bitcoin's flying. But transaction revenue is still 55% of the pie. If crypto crashes, that revenue just evaporates. The stock tumbled 10% on some recent crypto weakness. It's still tethered to that cycle.
That's a fair criticism. The volatility is real. A crypto winter would slow their growth down, no question.
And the valuation, they're trading at what, 51 times trailing earnings? Some metrics say 60 times forward. You compare that to Charles Schwab at maybe 8 to 12 times earnings. Robinhood is priced for absolute perfection.
It is a premium, but you pay a premium for growth. Schwab isn't doubling its revenue, righty?
Right.
You're paying for the software margins, not bank margins.
And what about regulators? They just had that $2 million settlement on order routing. Scrutiny is never far away.
Regulatory risk is always there for fintech. But $2 million? It's a parking ticket for a company this size. And if that Trump accounts rumor turns into reality, that government contract would be a permanent shield. It legitimizes them completely.
It's a high-risk, high-reward bet. You're betting the diversification works faster than the next crypto winter arrives.
I'm betting on the transformation.
All right, it's time to wrap this up. What's the final call? How do we score it?
For me, this is a clear winner. I'm giving Robinhood a bullish score of 9 out of 10.
A 9. That's incredibly high given that valuation.
The growth is just undeniable. The moat of 26.9 million young users is something legacy banks would kill for. They're profitable, they have cash.
I can't argue with the numbers. They're impressive. But I'm going to be a little more cautious. I'll give it an 8 out of 10. That 50x PE ratio, it just leaves very little room for error. But I admit, the momentum is hard to bet against.
So the thesis for you listening is this. This is a multi-year hold. Robinhood has successfully pivoted from a meme brokerage to a full-stack AI and financial super app. The key drivers are that 100% revenue growth, the huge user moat, record profitability, and these massive catalysts on the horizon.
And the timing on an entry.
That recent dip towards the $100 mark. That looks like the entry point. The technicals point to a run toward $170 and beyond.
So it seems Robinhood has finally grown up.
It absolutely has.
That's the deep dive on Robinhood. It is certainly not the same company it was 5 years ago. Whether that justifies the price tag is up for you to decide. Don't forget to subscribe, like, and comment to support the show. Let us know in the comments, are you buying the dip? Or is 50x earnings just too rich for your blood? We'll see you in the next one.